Hello, I want to go over quickly a potential long-term target here for crude oil. What we're looking at right here is the continuous futures contract. So when the futures contracts just roll over, it just continues on, continues on. You don't have to keep on getting a new one. This is how you can look back for years and years and see where potentially price could be going. So in April 20th, I know this chart's all screwed up right now, but that's because when we had that day in April 20th of 2020, when the price broke down all the way down here, down to negative $40 on it, it messed everything up. You had futures contract expiring, then plus the market was in a free fall that day as well as far as oil was going. So that's how you ended up with that. So what I did was I used, let me see here, where is it? So what I did was I went from, I just want to show you something real quick, going from there to there, using that one. When price broke down there, we were looking for the 30% line for price to come back and retrace to, and as you see, that never happened, going all the way down. And then we had which one's that one? Then we had the huge drop off down there, and price came all the way down here and hit the 3.618 and also the 4.236 level right there. So it was pretty interesting because when I do look at taking that trade and we haven't had the 38% line back, that's the first target I look for right there. So interesting, went all the way down there, but obviously price came back up, hit the 38% line, and so there we go. But then what I did was I went the other way looking for it. So using this one right here and then just going all the way back down to right down there, that low. Then what we do is we look for when price breaks this level right here, that blue line, which is what, about 65 something, 65 and change. When it breaks that, then we look for the retracement back down to the 38% line right there. So there's that blue line right there. There you have the break. Now, the 38% line that we're looking for is right there, this line. So as you can see, we just keep on drawing this up closer as it gets higher to it. And this is currently where we have it. Now, the only time that it would change from 38% line would be as price went all the way, where is it, up here to the 6.85 at $686 a barrel. So don't think that's going to happen. So the target we're looking for is going to be right here, at least the 30% line, which is at about $65.25. So when the price goes and breaks it down there and hits that, we will consider that setup complete. Currently, price is sitting at, this is the daily chart, sitting at $76.77. This is February 7th, 2023. So I'm looking for more downside long-term in the market, going down to at least around $65 and say 30 cents around there for it. We'll just draw that one right there to that right there. So looking for price to eventually come down and hit there. Now, of course, it can go lower than that, but that's the target area I'm looking for to consider that trade setup to be complete. Now, as you can see right here, if you just want to look at trend channel right down here, kind of going back down to the downside, about that and that right there. So as you can see, as a trend channel going back down, it's coming off kind of the higher areas, so we see if it just keeps on moving on down till it eventually goes on and hits that. Looking at the MFI indicator, it is getting close to being oversold down there. So typically when price does hit that, as you can see, like right here, for instance, let me make this a little bit bigger and see when price hits it. Typically, you will get a little pop-up, obviously sometimes bigger than others. This isn't set in stone sort of thing, because there has been times it's hit down into the oversold or even overbought, and you don't get a big pop-up the other way, and it continues to press on down before it eventually happens. But it's just a good indicator that there could potentially be a turning point going on to the other side. Sometimes it works better than others, like going right here. Look at this one. We have it. It went down right there to right there, and then you have a big move back up right there. So it's just one thing to look for. So if price does get over here in the oversold territory right there, we will look for a pop-up. But obviously it's just showed like right here. Sometimes it's smaller than other sides. But when you do get divergence in there, then you can expect a bigger pop-up, because like say it comes down to like right there to right there, but it does go down lower, but then price is going from down there to like right there. You got the divergence in there, so you're eventually looking for a bigger move up. But that's just one of the ways I use the MFI indicator. So anyways, that's what looking forward for long term on crude oil, looking for at least coming down in the long term to about $65. So another $10 drop here in oil, and then once it hits that level, we'll see what other longer term options that we're looking for it. So it's all for right now. Thanks. Bye.